Itemization has changed for some. Have you heard of SALT? If you've not heard of SALT when it comes to your taxes, listen to this episode because it could make a very big difference.
We hope you've been enjoying all the episodes from Secure Your Retirement. If you'd like to keep learning and receiving these episodes, hit the subscribe button and the bell so you receive alerts when they come out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in.
Welcome, everyone, to Secure Your Retirement. We are always excited to have Taylor Walbertson on with us, and she is our in-house tax guru and specialist. So first of all, before we get into anything else, Taylor, thank you very much for coming back on and chatting with us.
You're welcome.
We had Taylor on our TV show that comes out on Monday mornings at 11, and she's one of the most popular episodes. We get more people come to us and say, man, we really like that episode with Taylor than any other episode. So today, what we wanted to have you come on and talk to us about, we've been talking a little bit about the new, what's called Big Beautiful Bill Act that came out this year. And there's some little tweaks here and there that affect our clients. And right now, as we are sitting here, we are going through a big part of what we do in this time of year, which is all of our tax strategy meetings. And Taylor, you head those meetings up and get everybody ready and all that kind of stuff. And so one of the things that we've asked you to do is, as you are seeing things that could affect our clients and listeners, to bring those to us, because we will do an episode on the podcast, because if it affects a number of people, then it's probably going to be affecting a lot of people. And so today we're going to talk about this wonderful world of itemization. So thank you very much for coming on and talk about that. So I don't know, Merce, you want to kick us off here with the
Yeah. I was in a meeting today, and the person said it quite frankly of, I don't know what I don't know. And I think that's something we hear all the time of, I was a specialist in my field, whatever my career was, and I don't know what I don't know when it comes to taxation or financial planning. So that's why we've created this whole tax strategy program, and Taylor heads all that up. So Taylor, I think to start off, let's go with the assumption that people don't know what itemization truly is, and let's explain that before we can explain what the changes to itemization are.
Yeah, okay. So everyone who files a tax return is at least eligible for the standard deduction. That's a set dollar amount every single year. The standard deduction is the amount of income, first amount of income you do not have to pay tax on. This year, if you're a joint filer, the standard deduction is $31,500. If you're a single filer, it's $15,750. The standard deduction does increase if you're over the age of 65, so it might be a little bit different depending on your age as well. But in comparison to that, if you have certain expenses that add up to more than the standard deduction, that is when you itemize. So you either take the standard deduction or you itemize, depending on which one is higher in your situation.
So, hey, I'm going to kind of interject here just for somebody,
Yeah.
because sometimes if I've always done the standard deduction, I don't even think about it, right?
Right.
So just as conceptual. So there's things that I can write off
Yeah.
that reduces my income. One of those might be, for example, the interest on my mortgage, or it could be medical expenses to some degree. Or if I donated money, I get to have some deductions on those things. So what you're saying is, if all of those things didn't add up to at least my standard deduction, well, then it's better to take the standard deduction. But
Exactly.
if I have a bunch of expenses that could deduct off of my income more than that standard deduction, now it pops me over into, hey, I now need to itemize to get the credit for all those extra things. Am I right?
Yep. That's
Okay.
exactly how it goes. So yeah, medical expenses, there are some limitations on that, but medical expenses can be included in itemized deductions. And then you have state taxes that you're paying to North Carolina. You have property taxes that you're paying on your home, and then also like your car, property tax, things like that. And then charitable donations are included as well, mortgage interest. Those are like the main ones that most people would use for itemizing, yes.
Yeah, and I think that's an important distinction, Raiden, that you brought up is most people, if you go back, I don't know, when the law changed 10, 15 years ago is when most were itemizing and able to take advantage of that. And then we had tax law change, and now most, I don't know what the number is. I'm making this up for everyone, but probably 75% or more people take the standard deduction today and don't even think about itemization. But some of that's changing a little bit, and there's itemization things that we got to understand better, right, Taylor? So where do you want to start in this super easy place to understand of itemization?
Yeah, let's talk about what the law was previously and how the new One Big Beautiful Bill Act is going to change itemizing. So previously, as of 2024 and before that, there's what's called the SALT cap when it comes to itemizing. SALT, it's an acronym that stands for state and local taxes. So for the taxes that you're paying to your state, your property taxes, that those expenses were capped previously at $10,000. So if you paid $10,000 to North Carolina for your state taxes, and then you had $5,000 for property taxes, total between those is $15,000. You are limited to only deduct $10,000 towards your itemized deductions. So that's where we were previously, $10,000 SALT cap, we would say. Now, the new law has increased the SALT cap from $10,000 to up to $40,000. So, a pretty significant increase when it comes to, again, the state and property taxes essentially are what are included in that SALT cap.
So just a quick interjection. That
Yeah,
would make this a little bit easier potentially to get into itemization, right? You've got
yes,
more dollars that we
exactly.
could potentially take deductions on that pushes our total up potentially.
Exactly. Yes. Yeah. And the salt cap, to be clear as well, the $40,000, that's the same whether you're filing single or whether you're filing jointly. So that's one thing that actually does not change based on your filing status. It is $40,000 for everyone. So I do have a few examples of real clients that their situation for itemizing is going to change this year that I want to walk through and show what it looked like before the law changed versus what it looks like now after the law changing, and what that means in terms of like a reduction in dollar amount that they're paying in taxes this year now. Okay, so can I share my screen
Yep, I
for
got you
people
there.
watching?
Yep,
Okay.
I got you.
So the first example that I want to walk through, this is a person who is filing single. So just to walk through a couple items of income that they have, wages this year, they are not yet retired. And then they also have some investment income in the form of interest, dividends, some capital
Hey, by the way, just
gains.
just uh just can you go back real quick, Taylor, just for those that are
Yeah,
just listening and walking right now or driving, is
yes,
that we're showing wages here of 300,000. That's why Taylor said they're not retired yet. So they got income of
yes,
300,000. They've got taxable interest of 500, and then I guess some total dividends of around $12,000.
yes.
And
And then
what
some,
I would say while we're in this mode of talking to listeners, if you can't see
yeah,
the screen and you're listening today, I would listen. But this is one that I think you would want to go back and watch the YouTube or go on Spotify and watch the video of. The main reason is you get a little bit of insight into what Taylor's looking at when she's running tax strategy meetings and the software behind it, because it's very cool. There's a lot of numbers, but also it makes it nice and simple to understand. Sorry, go ahead, Taylor.
yeah. Okay. Then we also have some capital gains. Again, this is another source of investment income around $5,000. So total income for this person in this situation is going to be $317,500 for 2025. So this column that we're looking at on the left side, this is previous tax law. So I'm going to expand this and we can look at more details of what expenses they were using to itemize. So state taxes that they're going to pay to North Carolina this year, around $12,000. Property taxes that they're paying on their primary home is $5,000. And then they have some other property tax, like probably on a car, around $300. So that total for state tax, property tax is $17,300. And like we said, previous tax law, that was capped at $10,000. That was the most that you could put towards the total for itemizing. And then this person also has some charitable donations of around $38,000 for the year. So previous tax law, the charitable donations of $38,000 plus the $10,000 cap on the other expenses would mean they would still be able to itemize. This is greater than their standard deduction, but they were itemizing at a total of about $48,000. And now on the right side, this other column that we're looking at is a change in the tax law, where now that $10,000 cap that we had previously is removed. And now the cap is up to $40,000. So now they're going to use the entire $17,300 towards itemizing. And again, adding that same $38,000 in charitable donations brings their total itemized deductions now to $55,300. So there's no change in the expenses themselves. It's just a change in the law that is increasing that amount. So the increase in the SALT cap, that's another $7,300 in itemized deductions. This person this year is going to be in the 35% bracket. And by adding itemized deductions, increasing your deductions means decreasing your taxable income. It's essentially removing another $7,300 of income that otherwise would have been taxed at the marginal rate of 35%. So if we just take 35% of that $7,300, we'll see just from the change in tax law, this person's federal tax this year is going to be reduced by $2,555. So that's what they can expect in terms of when they file their tax return, a reduction in taxes. I don't have the details in here to look at, but we would have a conversation about what does that mean for their withholdings, or should they just expect a higher refund maybe this year, things like that, so that they have an understanding of what it is going to mean when they file the actual tax return itself as well.
So from what I'm seeing and hearing is that there isn't anything different that's being done. It's really understanding the new tax law. But the
Mhm.
last statement you made there, I think is rather important, is that there's a difference between tax planning and tax filing. We look at tax planning, and tax planning, if we understand kind of what our projection for taxation is, and it lets us kind of think through other strategies and everything like that. And it could be as simple as understanding your withholdings and not overpaying when you think you have to pay more, but you get more of a deduction this year because of the SALT change. So,
Mhm.
for people that are concerned about cash flow or overpaying or underpaying, I think it's really important to understand this tweak, even though it's not magic, but it is tax law change.
Right.
All right. So I think, are you going to run us through another scenario, Taylor?
Yes, second example that I want to look at now, so the first example, they were filing single. Now the second example, they are filing joint this year. So for the joint filers, their total income this year is going to be around $376,000. They're also not yet retired, so a lot of that is wages. Same thing on this left side, we're comparing previous tax law to the right, where now the SALT cap has increased. So previously they had state and local taxes combined of 24, or not previously, but they have state and local taxes combined at $24,000. Previously that was capped at $10,000. Now it's capped at up to $40,000. So that's another $14,000 in deductions that they can now use. They also have mortgage interest in this example, and they have charitable donations as well. So previous to the change in the tax law, their total itemized deductions was going to be $37,000. Now, with the increase in the SALT cap, the new tax law, they're going to be able to itemize $51,000. And they are in the 24% bracket. So I'll do the same calculation again. Whoops. Where now, like we said, their increase in the SALT cap is allowing them $14,000 more in itemized deductions. That's essentially removing $14,000 of income from being taxed at their marginal rate of 24%. So in this example, it would save these filers $3,360 in federal tax to be able to itemize. I mean, their ability to itemize does not change. It's just the amount itself that is changing this year. So
And I think you have a third example too.
I do. Yeah, the last example that I want to talk about, like I said, there are some limitations on the salt cap itself. So once your total income exceeds $500,000, that's the same limit for also both file or both single and joint filers. Once your income exceeds $500,000, that $40,000 salt cap starts to be reduced up until your income is at $600,000, at which case you're capped back at the $10,000 limit again. So if your income is somewhere between five to $600,000, you won't receive the full $40,000 cap. You'll be somewhere in between $10,000 to $40,000 cap. So in this last example, I want to look at that exact scenario where their income does exceed $500,000. These are joint filers again. So their total income this year, these people are also still working. They're not retired, but their total income this year, we're expecting around $540,000. So they are inside that $500,000 to $600,000 phase out range for the SALT cap. Their state taxes that they're paying to North Carolina is around $20,000. They have around $15,000 in real estate tax and then another $1,000 in other property taxes. So their total state and local taxes this year is $36,000. Previous tax law would have capped them at $10,000. New tax law caps them at up to $40,000. But again, because they are in that phase out range, their cap is going to be $28,000. So it's important to understand there are still limitations if your income exceeds a certain threshold. And then they also have mortgage interest and charitable donations. So previous tax law, they would have itemized a total of $63,000. This year, although they are not getting the $40,000 cap, they are limited to lower than that. They are still going to be itemizing higher than where they would have been to previous tax law. So the total we have with the update in the law is $81,000.
So this is where I think, having good tax planning in place for the higher income earner makes a lot of sense because maybe they're a self-employed and they're not funding any type of retirement plan to bring their taxation down a little bit, or maybe there's things that can be done. Maybe the way that they're withdrawing their money could be in a better place to kind of get them to where they are getting that full $40,000 salt benefit versus being phased out and not fully realizing why or how it even works. Because in taxation world, I think everyone wants to be in a place where they're paying as little as possible, but you got to understand the deductions and all these different things that we can do inside of the code itself.
Yes, that's exactly the opportunity. The phase out itself, if you are going to be in that range with higher income, is based on the total income that's reported on your tax return. Your total income does not include your 401k or HSA contributions. So yeah, if you're expecting your income to be in that range or above that range, and you're not maxing out your 401k pre-tax or you're not maxing out your HSA if that's available to you, then that's definitely a strategy that we would probably be recommending to reduce your total income that shows up on your tax return and hopefully increase the amount that you are eligible to use towards itemized deductions. Yes.
So I think what I see on this too, let's just go back to the first two examples in particular. I mean, and that one too, if we can get them below the 500,000, is that because of this new part of it where I could go up to $40,000, I now might look for other opportunities that I might not have done before. So, for example, let's say that I am charitably inclined. I now get a lot more, I get a lot better deductibility on that charity because I'm already itemizing. So, let's say I got to my thing and I said, well, normally I give away $5,000, $10,000 a year. How could I benefit now this year while I'm in this particular scenario? What could I do? And what would you recommend to somebody who maybe, let's just put somebody giving away $10,000 a year to a particular charity. That's what they do every single year. What could they do now if they got themselves into this itemized scenario?
Yeah, that's another opportunity. I don't have an example of that, but it could be possible that someone who was previously only taking the standard deduction, now with the change in the law, could be itemizing. And if they have charitable donations as part of that, then what we could do this year is combine multiple years of charitable donations into one. So if they're giving $10,000 in 2025 and expecting to give $10,000 in 2026, we could potentially look at donating a total of $20,000 in 2025 into an account where that can be distributed at the same frequency, the same pace as they would be planning to otherwise throughout 2026. But now we can get the $20,000 deduction in 2025 to report as part of the itemized deductions in 2025 and reduce tax this year.
Yeah, absolutely. Now, I think you've got a note. I want to just bring it up. Is this change at all in 2026? Are there any additional tweaks that we have to think about?
Yes. So first thing to be aware of, this SALT cap increase to $40,000. This is supposed to last right now through 2025 through the year 2029. And starting in 2026, so next year, total itemized deductions are also going to have some limitations if you are inside of the 37% bracket. So those with higher income earners at that 37% bracket, it's not the most straightforward calculation, so I won't get into the details, but it is important to know, yes, there are other changes for those itemizing in the 37% bracket coming 2026.
Well, I tell you, Taylor, what I appreciate is it opens up our eyes. When we don't do the tax work like you do every day. I mean, we're part of things and we're talking to clients. So you laying this out so nicely, we know that when we're a part of those meetings that the clients love it. And I think all of our listeners are going to love it too. And if you're listening to this and you're going, oh my goodness, this just sounds like a lot. Couple resources. Number one, Merce has already mentioned it. You can watch this video on Spotify or YouTube. We also have a blog written on this as well, so you can go read about it. And then if you ever do have questions and you're thinking, man, I would love to be able to have my questions answered, you can always reach out to us. Just go to our website, pomwealth.net, go to the contact us page, and we'll get you the help that you are looking for. Thank you very much, Taylor. We appreciate it. Everyone, have a great week. We'll talk to you again next Monday.
We hope you have enjoyed this episode of Secure Your Retirement. If you would like to learn more, we have actually created an online course called 3 Keys to Secure Your Retirement. This video course helps you to think through all the different steps as you get ready to plan for and live throughout retirement. You can access this by going to our website, pomwealth.net. In addition, you can also subscribe below to our podcast called Secure Your Retirement.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.